Hi students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as Fire Insurance. We're going to do question number 11. We're doing question number 11, page 556 in the books of Bipin. Right, let's start. They're saying that a fire occurred in the premises of Bipin on 15th August 2003 and a considerable part of the stock was destroyed. Okay, let's make memorandum of trading account. They've said that a fire occurred up till 15th August 03. Year begins on 1st Jan 03. Right? Now, the salvage was 15,000. The following information is available from the books of accounts. All sales and purchases are made on credit basis. Okay. Amount received was deposited into bank and payments are made by check. This is A, B, deposit into bank, and C, payments from bank. Right, let's start. Now they're saying that as per the bank passbook he deposited 1,06,300. The total deposit into bank is 1,06,300. That's my total amount that has been deposited into bank, and he withdrew 1,30,000 up to the date of the fire. The total amount withdrawn from the bank is 1,30,000. Right? Now, he sold on 1st July 2003 rupees 10,000 debentures at par which he had purchased in Jan. Interest on debentures was received on account for June rupees 300. Now if he has sold debentures he must have got money. If he has received money he has to deposit the money into the bank. So debentures sold. They are saying that he sold the debenture for 10,000 rupees. Plus interest on debentures. Interest on debentures he got 300 rupees which he must have deposited into bank, because they have specifically told you that whatever money he gets he deposits it into the bank. Okay. Next, he purchased a plant for 35,000 and paid installation charges 1,000. Paid. So these are payments. Plant purchased. He purchased a plant for 35,000 and he paid installation charges 1,000. Right? Next, other business expenses were paid up to the date of the fire 4,000. He paid business expenses which amounted to rupees 4,000. Right? Next, amount used by Bipin 3,000 before depositing it into the bank. He should have deposited that 3,000 rupees into the bank. He has forgotten to deposit the money into the bank. Therefore, I will deduct this. Amount not deposited 3,000. 3,000 has not been deposited into the bank, which should have gone into the bank. Okay. Now let's see how much is this. This is going to be 7,300. Right? Now, total money he has got is 1,06,300, out of which we have an account for 7,300. Who must have paid him the balance money? The only person who could have paid him so much balance money is the debtors. So this plus from the debtors, he must have received the balance 99,000. right? How did I get 99,000? That is my balancing figure. How did I get that? 1,06,000 minus 7,300. Similarly, 35, 36, 40,000. He has spent 40,000. We have an account of his expenditure of 40,000 and total amount he has spent is 1,30,000. That means to whom he must have made the balance payment? He must have made the balance payment to the creditors. Creditors, he must have paid them 90,000. How did I get 90,000? That's my balancing figure. 1,30,000 minus 40,000 gives you 90,000. Fine, do we get this thing clear? Next, goods costing 5,000 were used by Bipin. Goods costing 5,000 were used by Bipin and goods of 500 were given to Mr. Anil in settlement for repairing charges not received so far. Now, to purchase. He must have purchased certain goods out of which he has withdrawn for personal use. Goods costing 5,000. Goods costing 5,000 were used by Bipin. Fine. Moreover, they are saying that goods of sale price 500 were given to Anil. So he has made some sale plus he has paid repair charges by goods of 500 rupees by goods. Okay, let's move on ahead. Stock at the beginning 40,000. So to opening stock. Opening stock is given to you as 40,000. Next, debtors in the beginning. Here I need to make a debtors account now. Right? Debtors is an asset. So opening balance will go on the debit side. To balance brought down. Amount is 20,500. Closing balance by balance carried out. Closing balance is 11,000. Similarly, creditors account I need to make because they've given me the opening and closing balance. How do I know I need to make a particular account? For whichever account they give you the opening and closing balance, you have to make those accounts. Since they had given me the opening and closing balance of debtors, therefore I made a debtors account. They've given me opening and closing balance of creditors, therefore I'll make creditors account. Creditors is a liability, so opening balance will go on the credit side. By balance brought down 35,000 to balance carry down closing balance is 30,000. Right? Now, we also know from our working note B that certain amount was received from debtors. So this is by bank. From debtors we had received 99,000. From debtors we had received 99,000. Let us tally the debtors account. 99,000, 1,10,000. $89,500 will be your balancing figure. This will be called as to sales. This is my balancing figure. Right? So my sales is 89,500. Add 500 brings it to 90,000. Right? Similarly, I have made some payment to creditors. They are the receivers. Therefore, on the debit side to bank, the amount paid to creditors is 90,000. So this is going to be 1,20,000. 1,20,000. So this is going to be 85,000. This is going to be by purchase. This is again going to be my balancing figure. Right? So purchase is 85,000 minus 5,000. So this comes to 80,000. Right? Next, they've given you that. Then working note D and E. They've given you on investigation. It was found that the rate of gross profit to sale is 33 1/3%. Right? So straight away I can find out gross profit is gross profit ratio into the sale. Why am I doing it by this formula? Because they've given you two sale, so I don't need to do that cost price, selling price and profit, because in the previous lecture we had done cost price, selling price, profit. There they had given on cost, so when they tell you on cost you need to do it that way. If they say on sale you can directly do it this way, right? 33 1/3%, so that is 33.33 upon 100 into 90,000. Now when you do this on the CALC you will take 0.333 till the end, so in which case you will get this as 30,000. This is going to be my gross profit. Gross profit is 30,000. Once you have this, 120, 150,000. 150,000. The difference is called as closing stock. Closing stock. This is my balancing figure. It is going to be 60,000. Right? Once you have this, then make statement of claim. Closing stock. Closing stock is given to you as 60,000 less salvage. Salvage is given to you as 15,000. Right in the beginning they have given you. Therefore your loss by fire is going to be 45,000. Once you have your loss by fire, then you can find out your claim. You can say that claim is loss by fire upon closing stock into policy amount. Loss by fire is 45,000. Closing stock is 60,000. Policy amount is given to you as 50,000. When you work this, you will get your claim as 37,500. So the claim, insurance claim for this particular sum is going to be 37,500. Fine, do we get this thing clear? Right, this finishes this sum. Let's move on to the next sum, guys. Everyone's finished copying? Next, let's see the 12th sum, guys. Question number 12, page 557. They're saying that on 13th March, a fire occurred and partly destroyed the stock of Mona Traders. So in the books of Mona Traders, memorandum of trading account. Right? Now let's see this. Stock having a cost of 2,000 was salvaged. The stock was insured against fire to the extent of 15,000. The following particulars have been obtained from the books of records save. Now when did the fire occur? On 13th March, and the year begins on 1st Jan. 1st Jan 03 to 13th March 03. Right? Let's start. Balance as per the balance sheet. Stock of goods. Opening stock is given to you. Opening stock is given to you as 10,000. They give you that opening stock is 10,000. Next, they've given you opening stock of debtors. That means I need to make a debtors account. Opening stock to balance brought down. Debtors is an asset. Opening balance on the debit side 2,500. Next, opening stock of creditors by balance brought down 1500. Since they've given me opening stock of creditors, therefore I'm making a creditors account. Creditors is a liability, therefore opening balance on the credit side. Now let's see the transactions. Cash received from debtors. Cash received from debtors. Debit the receiver, credit the giver. If cash is received from the debtors, they are the givers. So this is going to be by cash 20,000. Cash received from debtors will be debtors account on the credit side. Cash discount allowed to debtors, right? Cash discount allowed to debtors on the credit side, because in P&L account it will come on the debit side. Therefore discount account it should be on the credit side. Amount is 500. Next, goods returned by debtors. Goods returned by debtors. One will be by returns, right? They are the givers. How much are they returning? 200. And second effect of this will be in trading account by sales. Cash credit less returns. They have returned 200 worth goods to you. Okay, so two effects. One will be in debtors account and the other will be in trading account on the credit side. Next, cash paid to creditors. They are the receivers of the cash. So creditors account on the debit side to cash 37,000. Next, cash discount from creditors. This is going to be to discount. Amount is 400. Next, goods returned by creditors. To returns. Goods returned by creditors is 100. Second effect of this will be to purchase less returns. You have returns of 100 rupees. Next, let's move on ahead. Cash sales. Cash sales is given to you as 21,200. Cash sales are given to you as 21,200. Goods given to famine relief funds at cost. Debit what comes in, credit what goes out. By goods given to famine relief fund. Goods given to famine relief fund, they are saying is 500. Next, closing stock of debtors. Debtors account on the credit side by balance carry down. Closing stock of debtors is 5,800. Closing stock of creditors will be creditors account on the debit side to balance carry down. Amount is 3,000. Right? Let's tally the debtors account first. 25, 26, 26,500. 26,500, 26,500, so 24,000. This is going to be two sales. This is my balancing figure, right? This will go in trading account on the credit side as credit sales, 24,000, right? Next, let's tally the creditors account. 37, 40, 40,500. 40,500. This is going to be by purchase. 39,000. Second effect of this will be in trading account 39,000. Fine, do we get this in clear? So in that case, this will now become 38,500 and 21,200 plus 24,000 is 45,200 minus 200 will give you 45,000. Fine. Okay. All sales are made at a profit of 25% on cost. Now, since they give you on cost, Your working note will be cost price, selling price, profit. On cost, assume cost price as 100, profit is 25, so selling price will be 125. Your sales is 45,000. So you can find out your profit. How will you find out profit? 45,000 into 25 divided by 125. So in that case, you will get that as to gross profit 9,000. Gross profit will be 9,000, right? Okay, let's move on ahead. Anything else given to you? Firefighting expenses are given to you. Okay, let's tally this first. If you tally this first, this is going to be 38,500, 48,500, 57,500. Yes, someone wants to ask me something.
39,000 minus 100 is 38,000.
38,900. So in that case, this is going to be 57,900, right? 57,900. The difference is going to be by closing stock. Right, this is going to be my balancing figure. So 57,900 minus 45,500 will give you 12,400. Right? Now once I have this, then I can make my statement of claim. Closing stock. Closing stock is given to you as 12,400 less salvage. Salvage is given to you as, right in the beginning they said that stock having a cost of 2,000 was salvage. So in that case, my loss by fire is going to be 10,400.
So we have firefighting expenses.
Yeah, I know. We have firefighting expenses also, which I'll be using once I calculate the claim, right? Okay, next, let's see this. Claim is loss by fire upon closing stock into policy, and since he said there's firefighting is to be added here. Firefighting expenses, right? Loss by fire is 10,400. Closing stock we found out is 12,400. Policy amount is given to you as, policy amount is, the stock was insured against fire to the extent of 15,000, right? Now we have a problem. The policy amount is more than the closing stock. I had explained this to you yesterday. If the policy amount is more than the closing stock, in that case, loss by fire is going to be equal to the claim amount. So claim amount here will be straight away loss by fire plus firefighting expenses. Loss by fire is 10,400. Firefighting expenses are 2,000. So this is going to be 12,400 is going to be my claim. I did not use that formula loss by fire upon closing stock into policy because my policy amount was greater than the closing stock. Next, let's move on to the next one, guys. Let's move on to the next sum. Let's see question number 13. On midnight of 16th and 17th April, a fire blazed the shop of a wholesaler, destroying all the records of goods except goods worth 10,000. So let's make memorandum of trading account. Memorandum of trading account. The fire occurred on 17th April 04. Your begins on 1st April 04, right? The accountant was asked to compile data for lodging a claim with the insurance company against a fire policy of 50,000. Right now, poor accountant ran from pillar to post to gather the following information from two suppliers and customers' accounts and statement of accounts. Now they've given you that your opening balance of suppliers. They've directly given you opening balance and closing balance of suppliers and customers. Suppliers are also called as creditors. Suppliers are also called as creditors. Customers are also called as debtors. Right? Now let's start putting in the figures. Opening balance of creditors. Creditors is a liability. Opening balance on the credit side, by balance brought down 68,000. Debtors is an asset. Opening balance on the debit side, to balance brought down 1,20,000. Next, let's move on ahead. Bills payable and bills receivable. Bills payable will go in creditors account. On the debit side, bills payable. Bills payable is given to you as 15,000. Bills receivable will go on the debtors account on the credit side as by bills receivable 70,000. Next, let's move on ahead. Goods returned. Two returns. Goods returned by suppliers is 9,000. Second effect of this, you will less from purchases. To purchase less returns. Returns is 9,000. Right? Next, similarly, goods returned by customer. Debtors account on the credit side. Returns. Returns is 25,000. Returns is 25,000. Second effect of this will be in trading account by sales less returns. Returns is 25,000. Next, let's move on ahead. Discount. Discount allowed by suppliers. To discount. Discount allowed by suppliers is 10,000. And discount allowed by debtors is 15,000. By discount 15,000. Next, remittance. Remittance means cash paid or cash received. Remittance by suppliers is 95,000. To remittance 95,000. Remittance by customers is 1,05,000. By remittance 1,05,000. Next, due on the date of fire, closing balance. To balance carried down. Closing balance of suppliers is 50,000. Closing balance of customers is 1,22,000. Right? So my debtors account is ready and my creditors account is ready. Let's tally this and find out the difference. This is going to be 1,79,000. This is 1,79,000. The difference is going to be by purchase. This is going to be my balancing figure. Purchase amount is going to be 1,11,000. Right? Second effect of this, trading account 1,11,000. Right? Similarly, let's tally the debtors account. If I tally the debtors account, the totaling is 3,37,000. The difference is called as debtors. The difference is going to be 2,17,000. This will go in trading account on the credit side as sales. This is my credit sales, 2,17,000. Right? So this is again your balancing figure of debtors, balancing figure. Okay, so we finished making the debtors and creditors account. Now let's start. From the bankers, the information that he has got is current account debited for trading expenses 15,000. So to trading expenses 15,000. He has spent 15,000 as trading expenses. Current account debited for cash purchase. Cash purchase. So we just make this correction here to purchase cash and credit. Cash purchase is how much? 7,000. Cash purchase is 7,000. Next, current account credited for cash deposits against counter sales. So again this will be buy sales, cash and credit. Right, cash sales they are saying is 25,000. Right. Next, stock statement submitted to bank on 1st April 2004, indicating stock at an inflated value of 10% above cost. Now here you will have to opening stock. Right. Now let's see the working note for this. Cost value. Right, opening stock. They are saying that opening stock has been inflated at 10% above the cost. So if the cost is 100, its value is 110. If the cost is 100, its value is 110. The value is given to you as 66,000. So what should be the original cost of opening stock? 60,000. How do I get that? 66,000 into 100 divided by 110. So that will come to 60,000. Opening stock is going to be 60,000. Fine, do we get this in clear? Next, let's move on ahead. From the proprietor's correspondence and personal diary, goods sent on consignment on 1st April 2004 to the date of fire remaining unsold with the consignee. Right? Sent, debit word comes in, credit word goes out. Trading account on the credit side. Goods sent on consignment. Now, let's see this. Let's make a working note for this. Working note 2. Right? Now, cost plus 10%. Cost value. Goods sent on consignment. Let's assume that the cost is 100. They are saying that they have been sent at cost plus 10%. That means their value is going to be 110. Now the value is given to you as 5,500. So X is therefore going to be 5,500 into 100 divided by 110. So goods sent on consignment is going to be 5,000. Fine. Next, goods sent on approval on 1st April having no intimation received till the date of fire. Sent, debit word comes in, credit word goes out. Goods sent on approval. Again, let's make a working note of this. Working note 3. Cost value. Goods sent on approval. Now they have been sent at cost plus 10% again. So if their cost is 100, their value will be 110. The total value is 2,200. So the cost of such goods will be 2,200 into 100 divided by 110, which will come out to 2,000 rupees. So goods sent on approval is going to be 2,000 rupees. Next, goods were sold at a gross profit margin of 30%. Working note 4. Right? Gross profit is gross profit margin or gross profit ratio into sales. First, let's calculate the sales. How do I do that? 25,000 plus 2,17,000 will give you 2,42,000 minus 25,000 will give you 2,17,000. So my sales is 2,17,000. Gross profit margin is given to you as 30%. So 30% of 2,17,000. Right? 30% of 2,17,000 will give you 65,100. So my gross profit is going to be 65,100. Once you have this, you can tally your trading account. Right? Purchases is 7,000 plus 1,11,000. That's 1,18,000 minus 9,000 will give you 1,09,000. So when you add the debit side, you will get this as 2,49,100. 2,49,100. The difference is called as closing stock. This is balancing figure. Right? When you subtract this, you will get your closing stock as 25,100. Once you have closing stock, then you can find out working note 5, statement of claim. Statement of claim, closing stock. Closing stock is given to you as 25,100 less salvage. Salvage is given to you right in the beginning as 10,000. Salvage is given to you as 10,000. So this is going to be 15,100. This is my loss by fire. So now I can calculate the claim. Claim is given by the formula loss by fire upon closing stock into policy amount. Right? Now how much is the policy amount? Policy amount is 50,000. My closing stock is only 25,100. Since the policy amount is greater than the closing stock, since policy amount is greater than closing stock, therefore claim will not be calculated by the formula, but claim will therefore be loss by fire. Loss by fire is 15,100. So my claim will be 15,100. Fine, do we get this thing clear? Right. This finishes the sum. We'll stop this here for the day. Thank you very much.